Welcome to the third session of our virtual 2021 ACCIS Annual Conference. My name is Enrique Velázquez, Director General of ACCIS, the trade association that is the voice of the credit information industry in Europe. Yesterday, we had two very useful discussions on supporting businesses in the aftermath of COVID and on putting data to work to ensure responsible lending for consumers. From both sessions, I took away that there is a need to ensure that more relevant data is available to facilitate financial decision-making. In the context of businesses, we talked about opening up data held by public sector bodies, and concerning creditworthiness assessments, we discussed about how new relevant data sources like payments account data could be leveraged. This third discussion starts where the second one ended. Open banking originated to increase innovation and competition in banking and payment services. As we heard yesterday, open banking uses include innovative alternatives to traditional credit scoring and affordability models. Now, open finance is an opportunity to build on the concept of open banking by extending open banking-like data sharing and third-party access to a wider range of financial sectors and products. It is also an opportunity to rectify possible mistakes made in the implementation of open banking. What will be the benefits of open finance? More accurate creditworthiness assessment and increased access to credit and other products are obvious candidates. Open finance could also create or increase risks and raise new questions of data ethics that will be brought up by some of our experts today. Finally, we will find time to discuss on the incentives that need to be put in place to ensure the widespread open finance type arrangements between firms emerging and the open finance ecosystem for it to materialize. To explore this transition from open banking to open finance, we have invited 5 experts. 2 of them will kick off our debate, each presenting a case study for 10 minutes. I will then invite the additional experts to provide their initial views for 5 minutes each before we open the floor for questions. Some additional information before we begin. As you may have noticed today, I am alone at the QD studio here in central Brussels. Let me feel your presence by creating an interactive discussion, please. On the right-hand side of your screen, you have a tool called Slido. Use it to send your questions to me. Use it also to answer the 2 polls that we're going to run by you. The first one should be available and will stay open during the next 20 minutes or so. It reads, do you use an app that allows you to see all your finances in one place, help you budget, find the best financial deals, and shop for products and services that suit you? Yes or no? With this question, we would like to understand whether you are or you are not using open banking services already. One more thing. This is an open event. Please post about it in LinkedIn or tweet about it or both, whatever works for you. It would be great if you could also use the hashtag ACCISConference. Before ending these remarks, I would like to remind my speakers to stick to time and help me ensure that we end at 10:30. I will now introduce our first speaker. His name is Frank Schlein. Frank is CEO of the CRIF business in Germany, Austria, and Poland. CRIF is a global information services provider. Frank has 20 years of experience in risk management, data management, and direct marketing, among others. Frank, you have picked up an intriguing title for your presentation, Open Finance, the End of Traditional Credit Risk Management. We are curious to find out. The floor is yours, Frank.
Thank you very much, Enrique, for handing it over, and welcome everybody here to our panel discussion, and specifically a very hot welcome on this day to this specific slot on open banking. And like the title is saying, even if I put a little bit down already the suspense in the beginning, because I want to make a clear statement on the answer raised. And this is open finance and open banking is not the end of traditional credit risk management or credit bureau. In contrary, it's a big, big chance for all of us who are capable to change. Change in the metrics of how to handle data, how to apply different analytics, how to handle different kind of technologies, how to generate and manage new sort and kinds of partnerships, and even more, and this is probably the most important, how we see the consumer itself. This I want to underpin I brought with me 2 case studies. Afterwards, I will derive some key lessons learned, and this will be the way on for this 10 minutes. Before I do so, most of you, I think, are familiar with CRIF, but some might not. So I promise I will be short. So please take up first slide to shortly introduce who CRIF is. So CRIF was founded 30 years ago with the mission to create value and new opportunities for consumers and businesses by providing reliable information, solutions, allowing more powerful decisions and accelerating digital innovations. CRIF is based on 3 fundamental principles. So first is we deeply believe that we can contribute on these missions by the best combination of data analytics, technology, and expert knowledge. Secondly, we need to act local when we want to be global. And this means in every country we are acting, we have also subsidiaries where we adapt to the necessary local requirements, but at the same time running global platform wherever appropriate. Third, and this is also fundamental, is that we are looking for long-term partnerships, meaning we are not publicly listed, we are privately owned, and therefore we invest heavily in the initial partnerships. And this is probably also the reason we need the solutions and all the expert knowledge, why we have so long-term partnerships with our clients. Our solutions range over the full digital customer journey, and what is here key is that we act towards the consumer itself, but also to businesses who have multiple relations then to consumers and businesses. And this is why our clients call us their best-in-class partner for integrated international B2B2C identity, credit risk, and fraud management provider via one platform. Let's take up the first example of one of our clients. Next slide, please. And this is showing one case study of open banking and could also imaginably be open finance, and showing the beauty of open banking towards financial inclusion. So enabling the consumer digitally to interact with companies and get certain goods. And this is an example from our long-term partnership with American Express. And they had the challenge that in digital application process for credit cards, they had rejection. So people who couldn't become clients even if they wanted to do. And this had mainly 2 reasons. So first, most of you might know that you need a strong authentication when you want to apply for a credit card. And the other, of course, is that you have a necessary score to have a proper creditor assessment in place in order to can apply this. And those 2 reasons sometimes led to the situation that applications failed. And together with American Express, we implemented an access to bank account. We did an assessment derived from the data out of the bank account. We analyzed the data. And by this, the applicants could then get the credit cards, even if they have been rejected in a very early phase. In our practical terms, some might know this under the so-called second chance use case. In terms of some numbers here, 36% initially used this kind of service, so initially being rejected and then tried again over this process. And 20%, so every 5th person became really a client afterwards by the second chance. We improved further the user flows. We are now above 45% of people really using this second chance, and every 4th client or applicant now becoming a client. These are impressive numbers, and I think this shows very much the beauty also open finance and open banking can have in terms of financial inclusion. Amex and us will go the way in other countries, other use cases, and this will be the way forward. Next slide, please. Second example is about a company called yes.com. A company in which CRIF has recently invested, and I brought this with us because it shows how open banking can also differently apply the normal PSD2 access to bank account. What is Yes doing? Yes is a banking ecosystem applying the interfaces of the banks in order to put services like identity management, account information services, and payment initiation. From a user perspective, the flow is pretty easy. So yes button is integrated, for example, with an insurance industry. I, as a consumer, say I want to identify myself via yes. So log in or register with my bank. I then choose my bank. I interact with my bank only with the credentials which I normally apply. The assessment is derived, what comes out of the bank account, it's shown to me. And then I say another time yes before it goes with the flow to the relying party, so the insurance. So 2 times yes button, very straightforward, pretty easy flow. We have installed this kind of new methods into the application processes of our clients. So beneath normal PSD2-driven open banking, these other identity checks and so on. And what I can tell you, even if it's early phase, it was massive in terms of usage. The conversion went up significantly, and already more than 50% of the whole flow of identification goes now via yes. So what is different here really? And this is not only the user flow. Yes, the user flow it's pretty straightforward. It's full control with the consumer. I see the result of the assessment before I forward to relying party, so I have full control. And at the same time, no data storage if no additional consent is given. So very straightforward, control in the hands of the consumer. But at the same time, and this is even important, it was a big benefit also for the relying party, because they receive different information than normal open banking. And why is this? Because in this scheme here, in the ecosystem, the banks actively take part in the ecosystem. So they are not kind of exploited or applied under PSD2 90 days backwards. They open up the accounts far further. So 12 months back, 18 months back, other information besides the account under the control of the consumer. Because in this schema, they don't use the interface to the clients. They can cross and upsell with their clients, and they also get money back from the relying parties of contributing the data into it. So fully other kind of partnership, other incentive scheme. And of course, the relying parties, so the insurance like it, because conversion raised, and also they have a very transparent process towards their clients, towards their consumer. So all in all parties are winning in this kind of new approach. And this is the beauty here, how open banking, and this I want to spill out, should really be focused on different user flow, other treatment of consumer, but at the same time, creating ecosystem with fair incentive scheme with all the players involved. Here, the banks. These 2 cases to underpin, here deriving the last key takeaways and lessons learned. And this is open banking, and as well, I see it in open finance as well. So yet, when you look over the world, at least from my perspective, there is no killer use case yet, really pushing open banking and open finance to, let's say, full-fledged enrollment in any country. But there are use case area which very much supports the use of open banking and will support the open finance space as well. And this is first starting digital onboarding. Some of you might know this under KYC, so know your customer. You can apply, of course, open finance, and surely in the future also open finance, to identify yourself with different kind of assurance grade, from strong customer authentication to a higher insurance level, also, for example, to AML compliant identification. Customer evaluation, and I say explicitly customer evaluation and not only credit assessment, because on the one hand, it's clearly contributing to the credit assessment, and we all see that the beauty lies in the complementary of traditional data and the new data here to enhance really the credit assessment. But at the same time, also giving the consumer the chance to say what I'm also interested in. So kind of cross and upsell scenario. So what is also my customer lifetime value? What is my potential, and what are my interests? The third thing is personal finance management. And it's clearly that this is taking up as well. So I, as a consumer, can actively go and get better contracts on utilities, insurances, and others, and manage this out of one environment. And the fourth topic coming up is payments. So doing payment initiation in those countries applied, for example, direct mandate to SEPA and others. These 4 areas will drive open banking as well as open finance. Last, the main risks. And the main risk, and I start explicitly with the risk. are the PSD2, of course, wanted to give, let's say, a common room of legislation and standardization of technologies. But we all know it was great that it was initiated because of kind of pushing up this open banking and open finance. But in the 27 countries currently in the EU, there is a, let's say, pitchwork kilt still in different kind of standardizations, different kind of regulations, because the national authorities did differently. And so we have a widespread with quite big barriers of entry still. And this is the truth for technical interfaces, PSD2, the same for regulation. And the last and maybe most important thing is the mistrust of consumers still in some consumer authorities. But it's not, I bring this up because pinpointing saying you need to go more loose. I think we as an association and others need to do more education on consumer, really showing the beauty and balancing the interest and coming up with the right solutions, giving the convenience to the consumer, but at the same time, necessary safety in terms of how the data is used. Last, and this is credit bureau perspective specifically, the main chances we see, and this is a kind of summary here, we clearly have seen that open banking and the data derived from the bank account is not substituting the data from traditional credit bureaus. And not only that in some cases we don't get the consents, but also in terms of performance, it's best to combine both worlds together. So here is the contribution. Secondly, from credit bureau, we have seen it's easier to enter other industries. It's easier to other countries to go because you don't need a broad data set to enter. You can directly follow your clients into this. So this also gives chances. The third, and I think Yes has shown this impressively as an example, we must be open to open ecosystems. The open ecosystems are built around payment, are built around identity. And we can, as credit bureaus, build them by ourselves, but also participate in those ecosystems. And this is also a big chance, but also a necessity. And the last, and maybe even most important point, and this is also not new to credit bureaus, we need to see the consumer differently. In the very, very past, it was always only the object of data, the object of information, but we need to see the consumer as a client and understand the user flows towards the clients and interact with them directly and indirectly. And these are the main chances. And all in all, we as CRIF, together with ACCIS, will do our best to continue to mitigate and come over the barriers and use exactly these chances here and spilled out. Continue to listen carefully to our clients and also the consumers to come up with the right use cases and the right balance between convenience and security. And last, of course, we will continue to speak with all regulators and authorities to really show the beauty of open banking and educate what's possible and what should be done and to get, let's say, the best benefit out of it. This has been my 10 minutes. Looking forward for the panel later on, and I hand back to Enrique.
Thank you very much, Frank, for illustrating our discussion today with his two concrete case studies on the second chance and on the ecosystem, which I think this second one is like a leap forward in the discussion. The fact that yes, this company has been able to generate this ecosystem, and thank you also for your assessment on the chances and the challenges that we have to face in the context of transitioning to open finance. I think there will be time to discuss about those in the questions and answers. May I remind the audience to go through the polls? You have 10 minutes left to complete them before I close them. Allow me now to move on to our second speaker today. Her name is Isabella Cesarini. She's head of product and project management at AutoOne FinTech. AutoOne FinTech is a 2018-born fintech headquartered in Berlin that bundles all relevant financial solutions for car dealers in a fully digital, fast, and straightforward environment. Isabella has over 20 years of experience in the mobility finance sector, leading projects at Daimler Chrysler Financial Services, Daimler Financial Services, and Mercedes-Benz Bank. You are presenting a case study on digital versus traditional scoring in the mobility industry. Thank you very much for being with us today, Isabella. The floor is yours.
Thanks for your presentation. Yes, we at AutoOne FinTech aim to be a fully digital and very quick FinTech in mobility finance. Our aim was to have a very agile customer journey for our dealers and end consumers. And that's the reason why we look at open banking score for being our reliable creditworthiness credit tool, but as well to provide our customer a quick way to connect to us and provide their information. Please to follow the next slide. The scope of our project was to leverage the banking data in our credit process, improve also our credit process using fresh information considering the COVID time and the situation of our customers, but also build up data in our systems to compete with a very quick answering time and very agile process, but also the possibility to implement this system in a two-step API call, so extremely the statistical power, but based on bank account and not on traditional social demographic or financial data. So fresh data based on the experience of CRIF, with the behavior of our customers. We were relying on CRIF also for the large database that was supporting the behavioral score behind the digital application. And we could somehow connect the open banking with an open banking score that was also an add-on to the open banking traditional systems. That was also for us a tool to combine with also the traditional scoring systems, leveraging the fresh experience and the situation of our customer after COVID and during COVID time. Thanks for moving to the next slide. The model was analyzing, obviously, and thanks for that, all the transaction and outstanding balances of the account. So to get a 1-year probability of default, so we could get the transaction data as traditional PSD2, but additionally to this, a score related to the transaction data of the bank account. Why we chose that as well was also the advantages of open banking score against a traditional system. So we wanted to, on one side, be innovative as a traditional for a fintech. We are a startup and we want to be new with our product. So thanks for moving in the next slide. Why we also combine digital scoring with the traditional scoring. Sorry, the next one. The next slide. The traditional, for digital scoring, we had access to fresh data and bank account against the traditional scoring information that was static financial data with a 1-year history. We had a high accuracy of components because they were based on the last 3 and 6 months PSD2 transactions, whether traditional information are based also on declaration and substitute declaration of the customers. And we wanted to be fully digital with as less as possible data to be entered in the systems. We wanted to have real-time data and not to have old-fashioned or outdated information. We wanted to cope with quick information flow. Thanks for moving ahead. We are a startup, so our project timelines are more than aggressive. So we wanted a plug and play a tool. We connected in less than 2 months time project. So we wanted to have VAPI full connectivity. we wanted to be scalable in the countries. So to have a one tool that we could deploy in multiple countries. We also deployed in Germany. We just recently went in France, and we plan for a future expansion in Austria and Spain. So we want a geographical scalability, whether traditional scoring systems need to be readjusted by the country specific. We wanted to have a super quick response time and adjust our models to the COVID time. And the only tool that was allowing us to analyze the current status of our customer in the current conditions was PSD2 and a PSD2 score against having old-fashioned data. And so that was not able to adapt to the current scenario that is somehow challenging from the credit industry. So we connected really extremely agile our front-end application with a one click from our customer to give us access to and authorize their credential to enter, to connect to CRIF and retrieve the transaction data that was then used to enter into our backend system for be included into the credit process. It's two API call, one for the customer to provide credential and one for retrieving the data. And that was actually providing us in a very quick way the flow that we needed for accuracy in the data flow. The advantage of that was as well that we could fully integrate in our digital platform, where the onboarding of customer was fully digitalized with absolutely very 10 minutes, quick 10 minutes time onboarding of credit SMEs, and we are aiming the same for consumers. Thanks for moving ahead. We also realized that working on the project, we could reach a very high discriminating power. So very good predictivity for us, considering traditional modeling were related to the past experience of the customer. So we could not get the fresh creditworthiness of the customer during COVID. So it was fully data driven. So because we have obviously full retrieval of transaction data as well as the score, we could measure the results for us and scale our credit decision process. And it was extremely easy to integrate in the credit flow. Thanks for moving ahead. As you see, we could reach a very high automation rate in our process. Was to also be able to add to the credit process, not only the traditional score, but the banking. And so having a high, a very scalable credit process also for us, not to have really the possibility to actively grow as a fintech without with a scalable system and credit application. What was meaning this for our customers? So this is a screenshot from the digital platform. For our customer was simply a 2-click authorizing us to connect and providing their credentials in a 2-click time that we could provide by SMS and by email. We could get the credential to retrieve the data. And by doing this, automatically calculate score and integrate this into the credit process. For us also as well was a big advantage to also not only be able to retrieve all the transaction data that's it's the traditional PSD2, but thanks for moving on the next slide. We committed with CRIF to calculate for us some tailored KPIs based on the algorithm of the transactions. And that means we could not only calculate a score, but somehow the behavior of the bank account. So in this, for our case, was relevant. How old are the last transaction? on the account. So that means, is the customer really having business, especially for SMEs in the COVID time? What is the number of days since the newest transaction? We wanted to also the average balance of the account. Are we able to, is the customer able to have a sustainable payment with us? So what is the status of his account? What is the amount of expenses and credits that the customer is paying with others? So what is the debt, I mean, the overall financial obligations? So we could retrieve not only PSD2 data, but as well generate algorithm KPIs that were feeding as well our credit process, not only on the scoring side, traditional, but as well as policy rules for the credit process. So for us was obviously a full package somehow, not only the traditional way to calculate the credit ability of repayment of a customer, but having also a fresh overview of how is the customer status as of now, and also be able to tailor our product proposal to the ability of the customer to pay us and the current situation. So we were, as we said, in a very quick process. Our digital platform is aiming to have a 10 minutes response time from onboarding to final payout. And that was going for the beginning to the end in a fully digitalized data flow, so that we're connecting data exclusively via API calls. So thanks, that's all from my side, and happy to get your question for whatever it's for you as curiosity.
Thank you very much, Isabella, for this presentation and this case study that has gone into quite interesting detail. Sometimes you have, let's say, more a helicopter view of the product, but I think you have drilled down into some of the specifics, and that's very useful. And also thank you very much for mapping the differences between digital and traditional scoring so eloquently. Before I introduce our additional 3 speakers, something that I will do in one go, I'd like to close the first poll of today. More homework, can we close it please? More homework is on the way anyway, because I am activating the second poll now. It reads, it should be on your screen. In addition to payments data, what additional data about you you'd be more willing to share to have access to new services? And I invite you to check all of the following categories. Well, the following categories that you agree with, of course. Data from other bank accounts or banking products, data from providers of other financial services, data from utility providers, data from online stores or digitally enabled lifestyle platforms, or publicly held data. We would like to understand with this question your sensitivity towards certain data categories. This one I think will be quite interesting. You have around 15 minutes to respond to this poll. Okay, now I move on to my next 3 additional speakers. The first to intervene will be Patricia Suarez. Patricia is founder and president of ASUFIN, the Spanish Financial User Association. As a consumer adversely affected by a non-transparent banking product, Patricia founded ASUFIN in 2009. Under Patricia leadership, ASUFIN has become a success story of strong and pragmatic consumer advocacy. After Patricia, the second speaker will be Gavin Littlejohn. Gavin is a very well-known leader of the open finance movement and advisor to central banks, regulators, and governments in many markets on this topic. Gavin serves as chair of the Financial Data and Technology Association, but is here as the interim Chief Innovation and Research Officer of the new Global Open Finance Centre of Excellence that the Financial Data and Technology Association and the University of Edinburgh has been instrumental in setting. And we will complete the first interventions with Matthias Leving, who is Deputy Head of the Digital Finance Unit at DG FISMA. The Digital Finance Unit is leading in the preparation of an open finance framework that should be delivered sometime next year. Matthias has a long and rich record serving at the European Commission in different capacities, mostly in connection to financial services. If I could now turn to Patricia, we have heard a lot already about the benefits of open finance for consumers. Use of real-time data, increased accuracy in consumer evaluations, speed. Do you agree? Do you see risks? What are your key messages, Patricia?
So thank you very much for this invitation and to give me the chance to share with you all our consumer perspective about open finance. So the answer is yes and yes. I see a chance, but also we see risk. So I will try to explain how we see this matrix world that we are entering in. Digital innovation should be seen as a chance for consumers, especially for non-banked consumers, because with open banking, we have already an experience of better products and services tailored to the consumers, and also more competition, to say so. But I must say also that we have, as consumers, many applications, and we are sharing many data, not only our financial data, but other data without knowing the implications. And here is where open finance is important, because actually, if you have a non-banked society, there are many people that can be excluded, financially excluded. And this is not good for society, it's not good for consumers. So open finance can give these societies the opportunity to be included in the financial system. However, there are many things that we should take care of. And I am talking, of course, about artificial intelligence, algorithm, and all the bias risk that this movement implies. We have been in the two previous presentations, we have seen very useful applications and of open finance, but also we see how there are many data that is used to provide better products. But what happened when this data is not used in an ethically way? We need, and this is the first key message I want to say today, that we need an ethical audit of the algorithm. And any company that is working with data should provide proof that they are using the data with an ethical context. Because if you don't do that, we have the risk of bias, of exclusions, of many negative consequences. So first thing is an ethical audit of the algorithm for all the enterprises using data. The second message I want to give today is about the challenges that we as consumers have. It's not only that we know that we are the owners of our data, but that we know the consequences of the data we share. It's not the same to share financial data than to share behavioral data, because this is another thing that can bring other consequences. So in my opinion, consumers, and this is a second key point, should have not only financial literacy, but now the challenge is also to have digital literacy and combine it to be to have the power to know that we are the owner of our data, of course, of our money, but also to know which data is really relevant to make choices about the data we want to share and for what we want to share it. And this is important because I think that we are all the time using applications that implies finance or not, and we are sharing our data to get some services, but without knowing the implications. So this is also very important, so that the consumers understand what they are sharing and what for, so to make good choices. Finally, I would like to say that for the financial system, but also for the society, over-indebtedness is a problem, and this is obvious. So financial inclusion is very important, but not at any cost. And I mean with that, it's good that we have 2 or 3 ways to make the credit assessment and to include more people to financial products, but there must be a limit, because if we use a wrong credit assessment, then there will be over-indebtedness, and that is not good, not for consumers, not for the financial system, for anyone is good, the over-indebtedness. So it's really, really important that all the mechanism that all the industry is developing using data, financial data and other data, is continuously review, so that they are working to include people, but with responsibility. So that is what I wanted to share with you, and I am open to questions and also open to the debate. Thank you very much.
Thank you very much, Patricia, for this initial intervention. I took away, we need ethical audit of the algos. We need literacy, but not just financial, but also digital literacy. And financial inclusion is good, but not at the cost of over-indebting consumers. So these 3 messages, I think, are very important, will resonate later on in the discussion. If I may now have Gavin, you've been working, Gavin, on these topics for a long time. What are the factors in your view that are central to the development of open finance?
Thank you, Enrique. Yeah, well, we see all across the globe now that various countries are looking to the situation in Europe, and specifically looking at what happened during the implementation of the Second Payment Services Directive, and choosing to copy elements of it, but also to learn from some of the things that didn't quite go right. And I hope to come back later on in the conversation today and focus on a few specific areas of things that need to be fixed. But for now, I'm going to limit my comments to positive things, 7 steps that would deliver a high quality open finance ecosystem. So the first of these is a customer data right. It's vitally important that this is the cornerstone on top of which everything else is built. It provides the requirement for compulsion for industry actors to participate. And it also enables, as part of that, the right to deal, so that regulated actors can't be restricted from accessing the ecosystem on a fair and equitable basis. The customer needs to be able to, as the second point, the customer needs to be able to enforce their data right via explicit consent. And that consent should enable them to understand the business model that they're being served, and also what data is needed to enable that business model. And they should have the right to take that consent away. The third, and by far the most challenging and difficult to get right, is the liability framework. There's a whole range of different things relating to inconsistencies across the open banking, open finance landscape in all markets, where we can see that the liability framework doesn't quite work in every situation. So there needs to be greater thought by policymakers and regulators into all the different harms that may befall the customer, and ensure that there's adequate systems of redress, proper cyber insurance in place, and that when things do go wrong, which they will at some point, that there's a very simple system for the customer to get redress. And then the fourth key point is that you need to have a legal and regulatory system that then enforces the first 3. I think it's vitally important that the legal framework provides a very clear direction, but without being prescriptive in the technical rules, so that the industry can adapt and solve. I'll come on to explain a little bit in the issues of PSD2 why that has been proved to be so important. The fifth area is to have a high-level architecture, tight, prescriptive technical standards that enable the industry to be very clear about what is acceptable and how to build their components. The sixth element is to have adequate governance and funding. The governance element needs to include stakeholders from the customer, from the data recipient, from the data donor, and where it works well, we see the regulatory authorities are in the room helping to keep all of the actors facing in the right direction. And that the participants, the industry participants, should pay into some central orchestrating entity on a fair and proportionate basis. It's been completely proved that without central orchestration, that the delivery and the standards are not good enough. And then the final piece is monitoring, performance monitoring. Ideally, performance monitoring should be done via a technology system that measures technology and not left to the self-reporting and arguments between the actors about what the qualities are. All across Europe in PSD2, we've seen the data donor commenting to the regulator that everything is fine, and the data recipient commenting to the regulator that everything is not fine. And the poor regulator is sitting there in the middle, not really knowing what information to believe. So it's vitally important that we have an independent, neutral, technical monitoring system that makes the enforcement and supervision for the regulators easier. So those are my initial comments, and I look forward to hearing what other colleagues have to report.
Thank you very much, Gavin, for this very comprehensive roadmap as to how we can sort of get open finance. Just quickly recapping from my notes: customer data right, that's the cornerstone. Enforce the data right via explicit consent and therefore the right to take it away. The liability framework, a legal system that enforces the previous 3 points, a prescriptive architecture of technical standards, adequate governance and funding of that, and the 7th, independent, neutral technical monitoring system of the whole system. Thank you. So I think indeed plenty of food for thought for our discussion. Matthias, you come in the last place. Open banking certainly did not happen by accident. You already heard Matthias saying that regulatory and regulation around it is important. So I guess you somehow concur with that view. But at this point in time, what would be, in your view, the main elements or the principles underpinning that future, or what should those be underpinning that future framework? Where are your ongoing reflections on this?
Thank you very much, Enrique. Let me take the occasion to thank my fellow panelists. It's always easier to come towards the end, and really thanks for the kind of providing for previous speaker for providing clear examples about what is happening in the marketplace and the potential benefits that gives rise to Patricia from a consumer's perspective, what matters and potential benefits, but also the key risks and challenges that we need to monitor. And then for Gavin, for on the basis of his deep experience of the market and PSD2 and open banking in particular, to kind of also set the scene pretty well for the kind of issues that we need to reflect upon. I mean, we're at a fairly early stage. You alluded to the digital finance strategy in the beginning of your opening remarks, I think, Enrique, which kind of illustrated indeed that we have concluded that the open banking experience is conclusive enough in a sense in terms of being able to stimulate competition and kind of generate user choice for us to build on it further and to signal our commitment to have an open finance framework in place by 2024. We're still at a very early stage as to exactly how we go about it. And of course, we will need to build up on the review of the open banking, the initial open banking approach via the PSD2 approach, which will be launched very soon. So I can sketch out in very general terms about the things that we think about. I think one thing to start with from the beginning is, of course, that regulation does matter. It is probably clear that regulation will play a role here, but it's probably not going to be the only thing that plays a role. What we've seen here, and I think that's also clear from previous speakers, is that there are broader issues where that needs to be addressed, and where regulation perhaps is not necessarily the best response. Of course, when we build these things as well, there are some key imperatives that come in, which is obviously the consumer being at the real center of their approach, in terms of the consumer maintaining his sovereignty or her sovereignty over the data that they own, and that their consent, their meaningful consent, is really the centerpiece of everything. So in a sense, yes, regulation matters. And I think that on the basis of what we've seen today, access does not happen. Data access does not happen by default. That probably has to be regulated one way or another. As well, when we do provide access and give consumers the possibility to give access to their data to other service providers, it's probably also very clear that these service providers, just like in PSD2, would have to be regulated in one way or another to give comfort both to the consumer that the entities that they give access to are sound, are well run, etc. And also for the system as a whole, because of course we also do see that when you develop these ecosystems where you have a kind of an increased interaction between a variety of actors, that system, the overall system consequences have to be managed and understood as well. We see value chains which are becoming much more elaborate, much more efficient in many ways, thanks to the intervention of additional actors, etc. But of course, we have to kind of maintain some kind of holistic supervision of these value chains as well, and to ensure that we understand what is going on, not only from a consumer protection perspective, but also from a kind of an overall integrity and financial stability viewpoint. So there's certainly a key role for regulation in kind of laying the groundwork for kind of enabling access, looking at the new actors that come in to provide the kind of new services, and then also to give consumers and to kind of encapsulate that kind of consumer consent that is vital. However, I think our reflections also indicate today, on the basis of what we've learned from PSD2, that regulation is not enough. There's a lot of things that needs to probably be looked at, and where possibly regulation is not the only answer. I think previous speakers has alluded to a lot to the importance of standards and having fairly clear standards. And that is something that is, of course, also possible to regulate, but where I think it also a much kind of closer cooperation with the various stakeholders to get that right would certainly be important. So I think in terms of method, the PSD2 approach is a start, but when we reflect on open finance, we also have to consider the fact that whereas PSD focused on a fairly kind of narrow payment services perspective, open finance considers a much broader range of potential products, and that probably also means that the approach may need to be different. But of course, if we're going to set this in motion in a single market of 27 member states, going back to the case, regulation will play a role just to solve the eternal collective action problems, to ensure that we all move at the same pace at the same time. So I think that's probably what I will say as means start, and I'm happy to come back in the panel with other questions.
Thank you very much, Matthias. So regulation does matter. We need to ensure that the consumer is sitting at the center. Access to the data has to be regulated. We need to take a look at who is participating in the value chains, these actors, and building up on the experience of PSD2. Maybe those would be my key takeaways from what you have just presented to us. I have a remark here on the question board, and possibly it's more for the for QD and the people helping us produce this. There is apparently an issue with the poll. It was not possible to mark more than one option. Can this be remedied? Yes. Okay. So what we're going to do, we're going to extend a little bit more the time for you to complete the poll. So remember that you can mark all the options that you agree with, all the different data categories that you think you would be happy to share. Very well. In the meantime, I think perhaps what we could do before we start our discussion is to reveal the results of the first poll, which was, do you use an app that allows you to see all of your finances in one place, et cetera, et cetera? So that is measuring to what extent you're using open banking. And 90% of you are not using it. 10% are. So in principle, very modest use of open banking app in the audience. Does this come as a surprise? I'd like to ask any of the panelists perhaps for a first reaction on this. Does this come as a surprise? The level of, or the understanding or the knowledge about open banking, the practical use of it.
Just maybe an initial comment. So I was involved in the creation of a company called Money Dashboard in 2005, which was a whole of market personal finance management app. And I was the CEO there until 2015. So I've got a little bit of experience of the open finance market prior to PSD2 coming into force in January 2018. The ability to get customers to move into those sorts of applications prior to regulation that supervised things like liability, particularly in a market environment where large banking institutions were writing to their customers, telling them not to use such applications, was a difficult environment in which to build a business. Whereas in the United States, the big banks have been offering open finance services since around about 2000, so that they've been at it for more than 2 decades. The core difference here is in Europe, the banks were rejecting it, whereas in the US they were adopting it. And currently, for example, if you were to compare the UK, which is reasonably well advanced with its open banking technology, we have 3% of the whole population using, the consumer population using open banking, whereas in the United States, it's 33% of the whole population, including children and the whole population. So what we can see here is that as the open finance market matures, we will see and large institutions start to provide service providers rather than just being data donors, we will begin to see far greater adoption in Europe. The other thing I would just point out is if you were to look at the data assets which are available in the United States versus Europe, well, currently access to non-payment accounts has been restricted by strong customer authentication when it was never restricted by the intention of the law. Whereas in the United States, there is an average for a personal finance management tool of 16 products, 16 different accounts attached to the application. The average currently in the UK is less than 4. And that's because it's restricted simply to payment accounts. So current or checking accounts and credit cards are the main 2 consumer accounts that are attached. There's no pensions, there's no investments, there's no brokerage accounts, there's no insurance products. There are few savings products, there are no mortgage products, other loan products. So there's that whole spread of different things that would make it far more attractive to customers to use those solutions. For those reasons, I don't think that particular result that you've provided is surprising to me.
I would also like to build a little bit on what Gavin is saying. And you can say, I stated also that there is not yet a really killer application from the consumer perspective, let's say having the full financial, let's say life in, let's say one wallet or one environment. But why is this? And is of course linked to what Gavin has said. There are restrictions, these are technical, these are legal. So this is a kind of hindering this kind of solutions. But I think it's also related to customer behavior. And this is important. When we, for example, look in other countries, and we as Grep Act, for example, also in India. And as those who are familiar, India has not started with open banking. They have immediately started with open finance and even open data, because not every, let's say, banking accounts are available. What means open finance for in India? You can access insurances, you can access tax, you can access even shares and funds of yourself to get a credit assessment, or you can alternative data even access. But even there in India, there is not yet one killer application, really, let's say, having it all in one place. And the development we see there is that they are building some kind of ecosystem for certain specific use cases, which will be then the killer application in one space. What do I mean? For KYC identity management, ecosystems are building, and yes, there are always very prominent ones. Next for payment, this is be done. Next for insurance is done. So it's more a verticalization in terms of use cases there and not the full wallet approach. And I think we will clearly see this also coming here in Europe when all the barriers became over.
That's a very interesting reflection. I think basically, if I understand you correctly, what you're saying is that if we would be moving to include other products under the open finance, that perhaps would trigger consumer interest to embrace the new technology and the new paradigm. But at the same time, the way we're doing it or the way we may do it might create silos, vertical silos, and that there is no killer app. But is there a killer app in the United States, Gavin? Is there something that every American would have on their mobile phone already? Sorry, I think you're muted.
Yeah, sorry. There's a whole raft of different solutions in the PFM space. The big aggregation services in the market, some of them are now operating in Europe as well, have got pretty good metrics. A couple of interesting things, though. Everybody should be aware that the US ecosystem was not built on APIs. It was built on screen scraping. And they are now having very serious issues as they move to APIs. The core thing which we never really understood, and I even as a market participant, I didn't see it fully until too late to do anything about it. I was amongst the group that proposed the use of APIs to provide a solution to PSD2 in 2015. The ink was dry on PSD2 in 2013. So the regulation of PSD2 had assumed screen scraping. And the thing which nobody anticipated was that there would be a technology shift between the directive being written and it coming live. And that technology shift it required not just the data recipient to have to build high quality technology, it also required the data donor in PSD2, that's called the ASPSP, which is quite an awkward title. But that data donor then had a role in manufacturing technology where they did not necessarily have an incentive or a desire to be in the ecosystem. They may not have wanted the product to be high quality. It may not have served their commercial interests to enable other parties to compete with them. So by introducing a new technology without having really tight requirements, really tight standards and regulation and orchestration of those standards, it enabled the delivery of PSD2 to be interfered with in a way that hadn't been anticipated when it was written. And I do think that everybody should reflect on that and understand that now that there are two actors in the technology build in order to get the data to flow properly, we need to have a much clearer idea about how we're going to orchestrate that in the interests of both parties.
That reflection, I think, takes me back to the beginning, to open banking. If open banking has already, and you have been very clear about this, some pitfalls, if you could choose, would you rather make sure that PSD2 in its current shape and form works better and those are remedied before we embark onto open finance? Or would you say that the priority should be on trying to onboard other products in the open finance discussion, and then perhaps simultaneously sort of try to evaluate the functioning of the PSD2 and change it? What would you think would make better sense? Is it open finance perhaps too much of a bite at this stage?
I'm not sure if you're responding directly to me, but the situation across Europe is very different. There are some countries where they've got a much higher quality of delivery, and it would be very sensible for them to move to open finance at the moment. I appreciate from Matthias's perspective that they need to set out a framework for open finance for the 27 member states, but it's vital that the issues that afflict the delivery of PSD2 are solved before we start layering more technical challenges on the same participants.
It's my opinion.
Isabella, go for it.
Yeah, it's my opinion that for a customer or for an end user to have an advantage to provide credential for open banking is always so linked to the possibility to have advantage from the open finance. So far, it was like a negative experience in the sense we request as credit institutions or fintech access to the transaction data and PSD2 for making a credit evaluation, whether on the opposite side, they are not having the advantage of open finance being receiving interesting financial offers based on the open banking. So in providing access to the transactions, they could receive tailored proposal that is fitting their profiles, whether in this case it's the other way around in European environment, whether we actually ask their credential to potentially approve or decline their applications where they actually already showed their interest. So this is for me the challenge, whether we could reverse that, but that will imply the customer to be available to make more bright access to their transaction data so that the one-time credential approval will be extended to the possibility to a 1 year access of the transaction and being able to tailor a proposal for their business, for their interest. It's a bit like having a platform that is giving them tailor financial solutions. This is a two winning, so giving and receiving position rather than the customer providing access for being evaluated.
You're putting forward a provocative thought that you would give access to your account with a validity of 12 months, for example. We will follow up on that. Perhaps Patricia would have something to say about that. But I think, Frank, you wanted also to chip in on this. Is it better to remedy or fix PSD2 before moving on to open finance? What will you have to say?
Just a short addition to what was said. And this is, so from an industry perspective and a consumer perspective, I would say I want to have both at the same time as fast as possible. But this is clear, but we are not, let's say, in a wish list world. We have to, let's say, go for practical terms. And there it's clearly, we want to, let's say, learn from the experiences from PSD2 in order to get them, let's say, right in the next phase and learn again for the next phase of open finance. And specifically on open finance, I want to add one point in terms of complexity. I think we are not talking only about open finance, because at the end, we are talking about open data. So not only financial data, but also it will be governmental, it will be health data, it will be mobility and so on. And all this needs to be handled under a certain regulated term, orchestration, and all what Gavin and others have said in these kinds and forms. Because again, when I look to myself as a consumer in the pandemic time, I would have wished to steer my health data and to get health consultation in these terms. And this the beauty is really to do it in your own control. But again, back to this question, as open finance is very big already and even bigger reflecting open data, I think we should go for a step-by-step approach.
If I may.
Patricia, please.
Sure. Yeah, I agree with all my colleagues. I think as Frank said that you don't use open finance until you see the advantage, and also
Exactly.
Exactly, you say that also. And why people in India are perceiving so easily the advantage, because they are not banked and they need financial solutions, and the providers of these financial solutions are not only the banks, but the other industry is doing best. So maybe in Europe we are so banked and so traditional. I mean, the consumer is already so in the tradition that we don't see the advantage of moving on. However, we are sharing our data. We are doing that, and we are in ASOFIN, in my organization, we do a poll every year about fintech behavior, and we ask people questions like, who do you trust more, your tax agency or Facebook, your bank or Google? And all the time they are answering my bank, the administration, the tax agency. So what they say is that they trust more the institutions and the industry that they already know. But the truth is that they are giving their data, their life actually, and we are doing that, to Facebook, to Google, and to the big tech. So there is a contradiction, because I think we as consumers, we still don't understand what we are doing when we are sharing data. And the truth is that we are not getting a lot in return. And that's the thing that consumer must move on. If you are sharing your data, your financial or other data, you must get something in return. You must get some advantage. And if you don't do it, then don't share it. But that's what I think.
I fully agree with Patricia in the sense of the advantage of the consumer. I'm after a long experience in banking environment, I'm now in a fintech, and the exponential growth of a fintech company due to the extreme regulation of bank systems and the conservative approach on providing financial solution in consideration of Basel II and Basel III requirements, and how many in the crisis time, how few companies and SMEs get access to credit for building and growing their business, is improving the power of fintech organizations that are providing more agile financial solutions. And I believe this could be also in Europe. We have been very traditional for a very long time, and now we are moving. I live in Berlin, where fintech are popping up every week, but where actually there is the need to have a new financial offer, startup companies having access to credit in an agile way based on business plans rather than credential and mortgage on the house. Because obviously banks are not able to provide these solutions. And I think that could be also the future of Europe in being more young and future-oriented project financing, rather than being the traditional banking system with mortgage on the house for financing the project.
If I may compliment as well, perhaps going back to Enrique's original question about whether the kind of link between open banking and open finance, I think that also what I take from my fellow panelists is that the two things are related, but at the same time, at least we believe, need to also move forward in parallel. We are clear, the review of PSD2, we have to take stock of these experiences, we have to fix what doesn't work, and that reflection is ongoing. We have to take from PSD2 what kind of also works, factor that into open finance, and then try to focus, how do we do that? Do we copy paste? Probably not. What are the key things we need to regulate in that case? And that's also where we'd be very interested in hearing panelists' views. We got some already, but it's something that we are kind of really looking into. And one thing that was already brought up is this big bang versus gradual. Of course, it is a big bite to kind of do open finance at once. It may well be that that's one of the dimensions we're thinking about as well, whether to go gradual or not. But I think one issue that I think also Gavin mentioned in his opening question was this change that perhaps you see in the marketplace from open banking at the initial stages having been fairly adversarial to now actually being a little bit of a shared interest, because that of course also has an impact on how we reflect on solutions going forward, is that, do you see, Gavin, I think you alluded to that the situation is changing a little bit at least. And of course, I think previous speakers, you also alluded to that the EU 27 is not a bloc. It differs a lot between countries as well, but your views on that would be very welcome as well.
I think just thinking about different approaches across the globe. In New Zealand and in Japan and the United States, they had development of API, but without a policy framework sitting behind it. And the challenge they've had there is that there's no right to deal, so that even if a fintech has raised venture capital or whatever they need, and even if the bank, let's call it a bank or other financial institution, has provided a high quality API, there's no right of that fintech to get access to the API. The very first bank in Japan to build a high quality API offered access to the fintech with a $5 million ticket before there was any customers. And when the fintech complained, the bank said, "Well, we don't really want you to use it anyway. We were told by the regulator to build the API." So at least under PSD2, you've got the right to deal. And if you're an accredited actor, you can't be restricted. So I would definitely choose to build on that. India has been mentioned a couple of times. One of the terrific advantages that India has over other markets is that their foundation, along with the new Data Protection Act, is that they've already got universal digital identity. And going back to Patricia's remarks about trying to ensure financial inclusion, well, the foundation building block of financial inclusion is digital identity. You have to be able to prove who you are to be enabled in modern financial services. So, if I was looking at the core building blocks, that customer data right with the right to deal, and also being able to make sure that people aren't left behind by trying to promote digital identity. And going back to Isabella's earlier comments about the utility of building on top of open banking, well, if you have a relationship with a bank account where you've previously been digitally identified, you're potentially able to leverage that into digital ID. And that might be, if we, for example, adopted a single standard, a FAPI standard, for example, as yes.com has, which we heard a little bit earlier from Frank. That sort of common standard would enable parties to be able to prove who they were and to be able to link in other accounts in a much more easy way without having a completely fragmented ecosystem where the customer, and this is vitally important, if you think about when you travel and you go into a new hotel and you have to learn how to use the remote control, and it's different everywhere you go, that's a challenge. The customer does not want to have to learn how to connect things with every single bank, every insurance company, every investment company using a wholly different method of connection. What they want is a pattern that they can learn. So if we're able to use those kind of common patterns and standards of technical connection and of user experience, make it much more inclusive and easy for customers to identify who they are and to connect the products and services that they need. I hope that helps a little bit, Matthias. From my perspective, those have been qualities in the market which have really improved adoption and made it much more consistent and fair.
Indeed, thank you very much. I think the digital identity is something that we've identified. Generally, Commission has put out proposals that we believe will help a few weeks ago, but the link to open banking is very well noted.
Yeah. I'd like to comment on the analogy that you have made to appliances, Gavin, just in a minute, because I read a piece that you wrote quite interesting on that. But before I do that, I'd like to close the second panel that has been running because there was this little glitch in its structure. And I think that would be a good opportunity also to comment on what Patricia was saying. I have been seeing how the voting is going and in what direction people are thinking that certain categories of data could be shared, and I think that will give us some food for thought. We have around 10 minutes to go. Going to your point, Gavin, on people traveling, going to hotels and using remote controls. I think you wrote also about electricity, that it should be like electricity, open finance, and that people will just plug into it and use it. You do not use the electricity directly. You use the applications that plug onto it. And then it got me thinking, you know, we've had electricity for a long time, and still I cannot plug my charger in the UK or in India or in the United States. I need to still change. So I'm just thinking and making the analogy, if we need something that can be plugged easily wherever you are, and you haven't get to that point yet on the electricity side, how much time do you think that we can still wait to have a standard for open finance? Is it realistic to have it?
Yeah, it is. You know, if you think about an API, it has three components. It has the registration and identity element, it has the security profile, and it has the data payload. So if you were to compare those to electricity, you know, the identity and registration is the plug and socket, so do the parts fit together. The voltage is a bit like the security profile. Do the two systems talk to each other? And then the payload's a bit like the appliance. Is it a TV? Is it a refrigerator? So the bit we need to get right for open finance is the plug and socket and the voltage. The payloads are going to be very different. They're going to be different by country. They're going to be different for different product sets. And mapping and trying to standardize those products doesn't make a huge amount of sense. What does make a lot of sense is making it very easy for you as a data recipient to be able to plug into the data donor and to make the connection in a secure way that doesn't take weeks of engineering time. To that effect, on the 10th of March, the new Global Open Finance Centre of Excellence orchestrated the first global technical standards discussion. In the meetings, we had the technical standards agencies from Japan, Russia, China, Australia, New Zealand. We had Nigeria. We had the Berlin Group and STEC from European Union, Open Banking from the UK. We had FDX from North America. We had Brazil, Peru, Colombia, Israel. And since then, the organization has grown, but we've now got an initiative underway to map all of the world's open APIs and to try to then enable in that digital library of APIs to compare the different standards. We've agreed as a group to try to work together on enhancing alignment where we can and to focus together on key things like interoperability and security. Whether that initiative is successful will depend on willingness of parties to continue to collaborate. There's no requirement in any of the participants to change their standard, but we feel that by working together in a consistent cadence and solving problems together, that in the future we might naturally converge rather than continue to diverge.
Okay, that is a very interesting initiative, this library via APIs, and you're pushed in the new center to try to enhance alignment. I'll move now to the results of the survey, if I can. Yes, so we were asking you what are the categories of data that you would be more willing to share to have access to new services in an open finance context. And you could pick up a number of those, the ones that you agree with. So the winning one is publicly held data, so fiscal or tax data, 55%, but tied with data from utility providers like water or electricity. Those are the ones that you would be more willing to share. Then a third one, but with 23% of the votes, data from other bank accounts. And then tied on fourth with 18% of the votes, data from providers of other financial services, pensions, insurance, investments, and tied on with 18% data from online stores like Amazon, Alibaba, or digitally enabled lifestyle platforms like Airbnb, Netflix, Spotify, or Cabify. So publicly held data and data from utility providers, top of the list. Then in the middle, data from other bank accounts, and at the bottom, data from other financial services providers and online stores and lifestyle platforms. What reflections would that trigger? Anyone in the panel would like to comment on those? Does it make sense? Do you think you are surprised? Patricia, you were saying that people tend to share more their Facebook
data. I can add my German view maybe, as e-government is not very well mature already. I'm not surprised about the governmental part. When you probably ask somebody about in Estonia, he would be astonished and saying, what's the problem? Because I can access already all e-governmental service. I can use this data all around here. And what are they talking about? But I think this reflects a little bit the, let's say, the status and maturity of the e-government, but also the potential use if this is really reachable. So I would say not surprising, the commenting from German perspective.
Exactly, I would say not surprised, because one thing is what we say we trust, and the other thing is what we are doing every day. So the results are actually very similar at what we get every year in our study.
The results, I would say, have changed halfway the vote, because at the beginning, people were more than happy to share information from online stores and lifestyle platforms, but that gradually sort of went down. Maybe once we sorted out the glitch, the results were different. We are 4 minutes away. You have 1 minute, perhaps, if you would like to say something, to conclude your interventions, a key message, and then I'll go on to the concluding remarks from my side. A quick round. Anyone would like to say something? Isabella.
It's very interesting also the progresses of the open banking in Europe, also for the harmonization of the platform and the access to banks, whether we will reach a point in which the customer journey also is easy and not complicated. And I'm open to see the development of the open finance on this very interesting progresses.
To conclude.
I'm specifically happy about the alignment that I think all, even if we come from different angles, have, let's say, the same view on the status and also the kind of way forward of enforcement and doing this PSD2, specifying better, let's say, to get a bit better standardization and harmonization, and going then the next step into open finance and open data. And this is, even if we come from different angles, consumer perspective, industry, credit agencies, and so on, this is, I think, at least for me, very good alignment from all perspective into it.
Gavin.
Yeah, so I guess API vendors are maturing. I don't envisage material issues in the future in the technology. I think the really difficult issues to solve are in policy and trying to be very brave and just try to think through how you can enable the customer to get the benefit and require the industry to follow certain patterns and rules to do that. The liability framework will be tough, making sure that customer data right and digital identity enable will be key. And I think once you get those key building blocks in place, the actual delivery of those solutions will be quite straightforward.
Thank you. Patricia.
Yes, I will say that the customers must not only improve their financial literacy, but that we have seen our digital literacy, not only to make good choices, but also to demand advantages to the providers to better products and services for consumers.
And Matthias.
Oh, thanks. I mean, just a few takeaways from this very rich debate. Say the potential of open finance in terms of financial inclusion, but also certain kind of risks in that respect. The importance of digital identities as a kind of a foundational structure for an infrastructure to have in place to enable open finance as well. the crucial importance in terms of regulation to grant these legal rights as a kind of a key takeaway also from PSD2. And the importance to get the technology right, which is a difficult matter given that it needs to be sufficiently clear. I think Gavin referred to the plug-in of the sockets. At the same time, it has to be technology neutral over time to stand the test of time, and hence to be have a certain kind of flexibility as well. So to get that balance right between clarity on the one hand and flexibility on the other one. So just a few kind of takeaways from a very rich debate.
Very much for those. I would like now to thank you for making this panel discussion so interesting and for sticking to time and for helping me out in the moderation. I think it was a very useful and productive exchange. I would like to thank also the audience for their participation and for having responded to the polls, and to invite them to go to the networking part of the platform, which is, I think, on the right-hand side of what you see now on the screen. And we reconvene in 30 minutes' time to continue our discussion in the ACCIS conference, this time on the topic of artificial intelligence. So with that, I would like to conclude. Thank you very much and see you soon.